Is the trend dying? Is this the beginning of a major reversal? In today's video, we break down the Gravestone Doji, one of the clearest but most overlooked bearish candlestick patterns. Let's explore how to trade it like a pro. What is a Gravestone Doji? The Gravestone Doji is a unique candlestick pattern where the open, low, and close are almost at the same price level. There's a long upper shadow, but little to no lower shadow. It looks like an inverted T and appears mostly at the top of uptrends. What it signals. Buyers pushed prices way up during the session, but sellers came in and pushed prices right back down to the opening level. It's called Gravestone because it marks the potential death of the current trend. Psychology behind the pattern. Every candlestick tells a story, and Gravestone Doji tells this. One, market opened strong or in an uptrend. 2, bulls tried to continue momentum, price rose. Three, suddenly, sellers took over, pushing price all the way back. 4, session closes where it opened, showing complete loss of bullish control. This creates fear and hesitation for buyers and attracts short sellers. Where does it appear? Gravestone Doji is most powerful at key levels, such as resistance zones, Fibonacci retracement areas, trendline touches, overbought zones like RSI greater 70. It's a warning sign that the uptrend may be exhausted and reversal is coming. Avoid trading it in the middle of a sideways market. Context matters. How to trade the Gravestone Doji. Entry point. Wait for confirmation candle after the doji, a bearish candle that closes lower. Enter short, sell, at the break below the Gravestone Doji's low. Stop loss. Place SL slightly above the upper wick of the Gravestone Doji. Take profit. Use previous support level as TP1. Use risk-reward of 1-2 or 1-3 to plan exit. Use price action tools like support or resistance or Fibonacci levels for targets. Pro tips and common mistakes. Pro tips. Works best with volume confirmation. If high volume on doji equals stronger signal. Combine with indicators like RSI, MACD, or EMA for extra confidence. Look for Gravestone Doji on higher timeframes, 1H, 4H, daily. Common mistakes. Jumping in before confirmation. trading in choppy sideways markets. Ignoring overall trend context. Placing stop loss too tight. Wicks can cause premature exits. The Gravestone Doji isn't just a spooky name. It's a powerful reversal signal when used correctly. The key is confirmation and context. Master this pattern, and you'll be miles ahead of other traders. Like this breakdown? Subscribe now and check out our full candlestick series. Comment below. Have you traded a Gravestone Doji before? How did it go?